Welcome everyone. Today we have another new episode, and this episode based on fintech growth. We have our expert panelists, Professor Edward, Professor Adrian, and Professor David. We have some other speaker; they will join today. So I want to start from Professor Edward.
Mhm. Well, thank you for having me again. I can only be on for a little while, but I wanted to frame this whole discussion about fintech because it's crucial to understand that in any kind of a economic system, and especially in a free market system, money is the blood of the system. Um, that is to say, it has several functions. Money is a store of value. It's a medium of exchange. It's a medium in which of investment. Think about it this way: uh, thousands of years ago, people had problems trading with each other because if I had a cattle and if I had some grain and if I had some um, pots that I had made, clay pots, well, the clay pots could break, the cattle could run away, the grain could rot. And so when I'm doing exchanges, it would be good for me if I can somehow hold my value in something that's not going to run away or break or whatever. That's how money evolved. That's how money emerged in very ancient times. Then, of course, you have, if you want to look at the financial system of the world today, you might look to the Renaissance when there was an incredible creation called double entry bookkeeping, where where individuals and then forming businesses could kind of keep track of income coming in and income going out. Insurance emerged as well. These financial institutions evolved over many centuries to give us the system that we have today. Um, and originally, of course, value was held in things like gold and silver. Still very good things to hold, by the way. But uh, but what happened, of course, is more and more governments took over, controlling the monetary supply, the money itself, um, and actually controlling financial institutions. But here's the issue. There's two issues here, really. First of all, how is money distributed? Because if you want to create a business, you're going to probably, unless you save up the money yourself, unless you save up the capital yourself, you're going to have to borrow it from somebody, from a bank, from business partners, from friends, or whatever. And so, how you get that money is very important. And one of the issues is how do you get the money distributed in the most efficient way? Remember, investments are, I don't want to say a gamble, that because they're not a gamble, they're a prediction that if I lend you some of the value that I have in my house or in my bank or whatever it is, that you can take that value and make something even more valuable out of it. And then I get a share of it, you get a share of it, the people who buy our goods and services get a share of it, everybody benefits. Um, and what you've seen, of course, in the last couple of decades is a couple of interesting phenomena. First of all, microloans. Mohammed Yunus in Bangladesh was known decades ago for pioneering the idea of microloans so that people at the very basic village level, for example, can access capital so that they can create small businesses. I saw this myself when I was in Kenya. These kinds of micro loans, not from Mohammed Yunus, but from others doing this sort of thing in Kenya, in Africa. Um, but what you've seen recently is two things. First of all, of course, with the advent of the internet and with and so forth, you see that these kind of financial services can expand in very different ways. You see two other important factors. First of all, a lot of people concerned about government control of currency. And right now in the United States, literally today where I'm sitting, you're seeing prices going up for almost everything. Not only gasoline because of a threat to the pipeline, but from every other thing. Because when government simply says we're going to print money, well, it undermines the value of the currency. That's what happened in the 1980s in Latin America. Countries decided governments decided, well, we're just going to print money, and that way we can all be rich. And of course, what happened is you had inflation and you had economies collapsing. That's why we see the emergence today of cryptocurrencies, which is, of course, another topic, but I think it folds into your bigger topic here. Cryptocurrencies meaning that, well, it's not dependent on the government doesn't control it. I want to tell you an interesting little story. There's a comedy science fiction book called The Hitchhiker's Guide to the Galaxy by Douglas Adams. It's a really funny book for those of you who are interested in science fiction. The second volume, A Restaurant at the End of the Universe, there's a discussion of a bunch of people who were really, frankly, stupid people who were put in a spaceship and crash landed onto a planet. And these really stupid people are trying to figure out how to create a civilization on this planet. And one of the things they decided is, well, if we make the leaf off of trees currency, then everybody can be rich because there's so many leaves around, right? Wow, this would be great. And so they decide to declare the leaf to be currency. And so they're explaining to some people, some hitchhikers who come by, who are on that planet. Well, we decided everyone could be rich by making the leaf to be the currency. Of course, we have a small inflation problem. It takes one whole forest of leaves to buy one peanut. So this is the problem that a lot of countries face when they mess up their currency. But what is exciting, though, is about the emergence of Fin. And I think you're going to hear more discussion about that. But to me, this is part of the whole process of an emerging exponential economy where we're looking for alternative ways to provide financing to entrepreneurs and to, frankly, everybody else. So hopefully that frames the discussion a little bit. And I'll look forward to listening to the rest of the discussion when I have a chance. So,
thank
you very much.
Thank you, Professor Edward. Professor Adrian, how do you want to analyze the fintech growth, and especially what is happening inside Asia Pacific, even in Australia, how they utilizing this technology or how they engage with this kind of technology?
I think the cryptocurrency is the very interesting phenomenon. I'm not sure whether the thesis that cryptocurrency will be storage of value will be true, but in the short term, at least, we can see that there's a huge amount of money being put into cryptocurrencies. I tend to think that they will not be used as a means of money transactions. I suspect that governments will somehow turn physical currency into some kind of digital currency in the future. But anyway, it doesn't mean that in the short term people can't make a lot of money from cryptocurrency, because many people become millionaires or even billionaires from cryptocurrency, and their inherent value is basically zero. But as with any other market, it depends on what people are prepared to pay for something that determines the real value. Even if you look at something like gold, what inherent value does gold have apart from people willing to pay money for it? But I think for in the short term, there's a lot of money to be made with cryptocurrencies, and also I believe the US dollar still will be the premium form of storage of value for at least for the foreseeable future. I don't think anything can seriously compete with US dollar in terms of storage of value.
Thank you. We have our another famous speaker, Professor David Schumacher. So how do you want to analyze this point, and specifically how the actually transhumanist party, they engage with this kind of modern technology? What's your analysis?
Yeah, good morning, Sharif. Well, good morning here. Good evening there. Always happy to make that distinction since we're on opposite sides of the world. So thank you to the two speakers so far about their discussion. I think I want to build on a little bit of what Edward was talking about with history, but maybe a little more modern. Fintech or financial tech has been around with us for a long time, even way back in the early days that Edward was talking about, thousands of years ago. But as technology has grown, as sophistication for consumers has grown, so has the financial aspects that go with our modern day technology. Originally fintech started out in the back room of well-established financial institutions, looking to be able to process the repetitive tasks faster, to be able to, quite frankly, limit the number of humans that they had to employ to get this done, all the repetitive requirements of keeping track of financial transactions. But something came along in the 1990s and then into the 2000s and so forth, and that really was personal computers entering the mix. I remember when I got my first personal computer after playing games and a few other things that I did with it and exploring with it. One of the first things I did was buy budgeting software because I was tired of keeping track of budgets and so forth by hand. And that first started out with spreadsheets that have been around, for a long time, and then went to dedicated budgeting applications, and then bill paying and a number of things from a consumer standpoint. So when consumers entered the picture, that really changed this whole idea of financial technology. Yes, today, still, the big money in financial technology is on the back end, trading between big financial institutions and so forth. But the disruptive front end, I think, is where the growth is at. And that's the topic of our conversation today, which is fintech growth. So part of fintech is cryptocurrency, which has already been mentioned. It gets a lot of press, but I really want to talk about maybe even the more mundane things, because that's where I really feel that the growth is going to come from in the financial technology area. So, what things have done that? Going from the personal computer, downsizing, getting handheld devices, smartphones that can handle transactions, and then even going even further than that, down to wristwatches, and soon, I believe, we'll probably see smart rings that can do financial transactions, or maybe some out there already. But currently with my smartphone, I'll deposit checks into my bank, which is in another state. I haven't physically set foot inside a bank now for years. There's been no need to do that, whether it's to negotiate a loan, whether it's to deposit money, whether it's to send money to another third party, either here in my state or in my country, or I buy products for one of my enterprises somewhere else in the world. And this is all done now, completely done through the use of fintech technology. So what are the advantages that are going to drive growth? Well, I think Edward talked about microloans, but I think microfinance in general will be a big growth factor. So while microloans is part of the microfinance, doing all the things that we normally do, that we would have done with paper and then computers and then with smartphones, will all be able to be done off of a wristwatch, off of dedicated applications for trading among people that are in common industries, or selling, as is already done to consumers. But this whole idea of microfinance, I think, is really where the growth is going to be at. So maybe I'll come back and talk a little more about microfinance in a minute, but I want to still continue to talk about why we've had the growth that we've had. And I think some of this is just plain convenience. It's so easy to be able to buy through the computer, or to be able to walk into a store and be able to pick up your products and then tap your wristwatch against a reader and pay for it on the way out. We even have one store here in the Phoenix, Arizona area where I'm at that you can register as a buyer, and you go in and you pick up your buying cart. They know who you are when you walk in. You go and you pick up items off the shelf. You go to a counter and put the things that you bought into a bag, but it's not checkout. You're just putting the things into a bag and you walk out of the store, because as you picked up each item as you walked around, it was recorded what you bought or what you had put back on the shelf. So allowing yet even more freedom to the consumer, and then it helps to drive down costs for the merchants themselves, which both of these are a big part in this growth. I think the pandemic, which we've been talking about now for the last year, has also been something that's facilitated this. I know people now that buy groceries and things of that nature that they didn't do a year ago. So fintech is pandemic friendly, or it's any kind of friendly that keeps you confined to a space, and it's introduced people to the technology, which I think has maybe helped drive it a little faster. People now can, and I use some of these applications too. We can talk more about them as we go along. But in the introduction, I want to talk about fintech applications for crowdfunding, somebody that needs to raise money, investing, once again, micro investing, where I can put a few dollars in and buy fractional shares. There is so much that's going on that's driving all this. We're seeing new disruptors in the insurance area. And then budgeting, which is one of the first things that I've come along with, has now made it down to the smartphone level and has made it extremely easy for people to do budgeting that couldn't do it before. So the things that we were doing in the past and doing pretty well, we're doing even better with, and we're opening new markets and new possibilities. But this idea of the microfinance area is going to be the big thing for growth. What are the problems when it comes to that? Security. Edward talked about a breach, a ransomware attack on an oil distribution pipeline here in the US. And that's not an uncommon occurrence. It's a big occurrence because of the amount of people that it impacts, but it's impacted a number of small businesses that I have worked with for years. So that is something that will be something that will maybe put the brakes on this a little bit, but I think we're going to overcome that. And then the other one, which Edward also alluded to, is what goes on in government regulation. He didn't specifically talk about regulation, but I had a feeling that if he was still on the call, that's where he would be going next. So some of these will be some of the balancing factors. How those are going to specifically play out, I have some guesses, but I don't know, and I don't think anybody knows. And that's one of the things that I'll be very interested in from the transhumanist standpoint. Transhumanist meaning transformation of humanity for a better future. That's the type of things that I work in. And I'm looking at promoting the parts of fintech that will add to this betterment for the greatest number of people. So that's my introduction.
Thank you. Thank you, Professor David. It's really helpful for us, especially we have to understand the detail about the fintech application, and especially micro initiative. I'm just sharing my personal experience. When I was undergraduate student, I get chance to directly work with Microfinance Institute as a researcher. So I get chance that time to get involved with these grassroots level people. I'm just sharing my understanding from the research that the interest rate was very high. That's why still I can remember the benefit from this micro loan or microfinance initiative. I think it's questionable. There is many things we can improve. On the other hand, what I see in Malaysia implement the same thing, the microfinance initiative, and they reduce the interest rate. So Malaysia, I want to say, very successful for implementing this policy. On the other hand, when I do corporate work with United Group, we develop United Trust, and we go for this micro loan with zero interest. We just implement these things with the combination of like Islamic finance as well as this microfinance concept together, and we go with this zero interest concept, and we find that zero interest concept actually working properly. I can remember just 5-6 years ago we started this thing. So we can combine like from developing nations as well as developed nation technology, developing nation concept, and human interaction through this process. I think we can modify this microfinance and this kind of concept. Maybe it will be more modern, more helpful, and it may be helpful for transhumanists, like more like transfer human lives in a better place. That is the way we can work together. So we have our new friend, Mr. Shovik, as well as Mr. Aaron. So I want to start from Mr. Shovik. Uh, and thanks, Mr. Aaron, for supporting World Talent Economy Forum, because we are looking for many volunteers and new energetic people. So Mr. Aaron actually supporting World Talent Economy Forums and requesting those who are interested. I get a very good support even from South Asia and Asia Pacific, different university, school, college. They are joining in World Talent Economy Forum, because our target that we want to develop something meaningful for grassroots level people, especially academy, research related work, creating employments and this kind of things. So we need more of the support, especially we need more volunteers like Mr. Aaron. So hopefully we get support, and definitely Professor David, Professor Adrian's, this kind of professor can guide us how we can create new things for our people. So I want to give up like chance to Mr. Shovik. Yes.
Yeah, hello. Yeah. So to start, I would like to say that money was always important, be it in the past or in future, it will also be important.
Hmm.
Right. So the requirement of fintech is always be there.
Hmm.
So
Okay.
from the
Okay.
very
Okay.
beginning of internet, fintech was always in consideration to be developed, and
Hmm.
so there had been technologies that the banks use, or like the e-commerce sites, they use the payment gateways. These are the important parts of fintech. Are you hearing me right?
Yes. 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 You are
Yeah.
from Pune, right? You are from Pune.
Yeah, my farm was in Pune.
Okay. Okay.
My past farm. Currently, I'm in
Yeah.
Kolkata. In fact,
Okay. You live in Kolkata.
yeah,
What part of Kolkata? Like India, right?
yeah, I live in Kolkata currently.
Okay. Thank you for
Yeah,
joining
yeah,
World Talent Economy
it's
Forum.
India.
Thank you. So, Mr. Aaron, so how do you want to analyze like this today's topic, and what the contribution you want to do through this fintech and this kind of things? I think this is very important. Yeah.
Yes, it absolutely is. Something that's kind of at stake is, and I know this is a bit bold to say, but kind of the financial liberation of humanity, wherein, some of these cryptocurrencies, the owners have already sold out. There's no more development. They're ownerless. And this kind of seems like a problem until you realize, just how decentralized currency could, come to affect us moving forward. Everybody's always concerned, well, okay, this store of value, who controls it? This store of value, who controls it? If the world bank's in the US dollar, does that give the US an unfair leverage? Not only that, but coming into kind of the subject of regulation and control. So here in the United States, there have been a lot of efforts to regulate cryptocurrency because it being really popular here, there was a risk of it actually toppling some of our financial institutions. And I'm sure some of you have seen this drama playing out with Dogecoin and things of that sort, where, why would you do it any other way? Now, one of the things that was mentioned is that this is kind of seen more as like a stock or something to be traded at this point. I would like to see it stabilize, which is a pipe dream, to the extent that it could be used for transactions. Now, that being said, what does a regulated market look like? Well, here in the United States, unfortunately, it means that most of your things, you have maybe 8 coins on most exchanges. You have maybe access to 8 different currencies. And furthermore, you end up with platforms like such as one called Gemini, where they offer you a guaranteed, up to 7% and they try to act like, oh, wow, that's 10 times or 100 times whatever the national interest rate is. Well, what they neglect to tell you is that, like the growth of something like Dogecoin is in the thousands of percents. So there is kind of a lot of manipulation that's going on in the regulated markets here. And you end up to where if you want to invest in a new tech startup, say in India, that has launched a token as, a way of funding the project, you are pretty much forced to do it through, a virtual private network or something of the sort. So, whereas, yes, regulation to some degree is important, exploitation has been one of the big concerns of some people, especially when you see some of the economic growth that it's allowed in some of the countries that are still developing in, such as Africa, where, their currency is worth almost nothing, yet you have the ability to easily and readily purchase cryptocurrencies through your cell phone, or through something of the sort that could see you exponential growth. Again, why would anybody do it any other way? And what really are the long-term economic effects of this? Because frankly, it's too soon to know. So I guess to sum it up, I'm interested in hearing some viewpoints moving forward as to like how could it be regulated in a way that still allows people access without exploitation, and how can we continue towards more of a decentralized push? Thank you.
Thank you, Professor Donalds. We are discussing on fintech growth. So, how do you want to analyze today's topic? What's your viewpoint? How we can improve that area?
Well, this week's Economist had a special issue on banks and banking, which was just fascinating. Am I repeating something that someone else has already said? Uh, I hope not. But basically, I'd like to just quickly mention what banks do, which is that they provide a safe place for your money, and then they loan your money out to someone else so that they can make money, and then theoretically they pay you interest on that. And that's what bankers have done for hundreds of years. So what is happening is that various countries like China, and all countries, in fact, or I mean all developed countries, are starting to think about an experiment with e-money. So in other words, what we'll have is electronic dollars, and the dollars will be issued by the uh, Federal Reserve Bank or some central banking entity inside of the country. And that will allow you to basically have your money be electronically stored in a place where it's absolutely 100% guaranteed, and there's control over how much of it that there is. So one of the functions of the central bank is that they uh, kind of control how much money that there is in circulation so that they can keep it stable. Unlike Bitcoin, which there's a limited amount of, and people are get up, and basically I don't really understand why it would be increasing in value, except that, like gold or diamonds or something like that. I mean, diamonds are valuable because they were heavily marketed by the De Beers, and they kept control over the amount that there was available. And so because of this artificial scarcity, they became more valuable. So there's sort of artificial scarcity and other reasons that people, but you can't use Bitcoin to buy stuff at the 7-Eleven, or you can't use Bitcoin to buy your groceries. And the idea is that if a central government like the United States government made these equivalent to dollars, then you could use this to buy things anywhere. And another point about banks I want to make that's very interesting is that after they take the money, they lend it to someone, the person pays them interest, they're creating money. I mean, that's just money that's appearing. It doesn't have any real basis for it. You make money on money, It's not as if the money represents something of value. It's just that's how money's made, created. And so the Federal Reserve in countries is the lender of last resort. And when people say that they're printing money, what they're really doing is they're making it possible for the banks to be able to do what they do, so that more money will exist in society, whichever one. The dollar right now is the global reserve currency. And so basically, if you buy a tanker full of oil from Saudi Arabia, you pay for it in dollars. And it doesn't matter who you are. And because of that, it gives the United States a huge amount of power globally. And so China is actively trying to see if they can get people to have people pay for things in yuan. And when transactions all become completely electronic, it will be far, far easier for people to pay in any currency they want. So this challenges the United States hegemony in the power that they have because of controlling the dollar. I mean, because of the dollar becoming the reserve currency. So what's happening right now is that China's actually running some experiments with e-money. There's countries, I think it was the Netherlands, that's been doing it for a while, and the United States has a portion of the Federal Reserve and other places that are right now working on e-dollars. So we'll probably start seeing e-dollars in maybe 3 or 4 years. And that'll completely change the finance. Oh, yeah, let me say this. One other thing is, if the banks are cut out as a middleman, who are you going to borrow money from? I mean, who's going to have the money piled up for you to be able to borrow it? And no one really has an answer to that question yet. It's a very, very disruptive thing that's in the process right now, and the process is starting to happen. So,
Thank you. I want to start from again, Professor David. There are some questions. Even I think our panelists they can give answer on that. Especially Nur Fazrin from Malaysia. She want to know: is fintech is a great career for people? Like, is there any opportunities for the youth community from Malaysia, or they can develop their career on that area? Ale Ahmed, what will be the future of fintech for developing nations? Saros from Sri Lanka, he actually really enjoyed today's sessions. Oshnakate, I think Professor David, you know him from Africa, so they really enjoyed today's sessions. So, Professor David, how do you want to guide, especially the young communities from Malaysia and Asia Pacific, even Africa and South Asia, regarding this cryptocurrencies, even financial technology and its career opportunities? Yeah.
Right. And I think those are really great questions. And before I answer, I want to go back to a distinction that I made in the beginning, where cryptocurrency seems to get a lot of press and a lot of talk. I still think that the big money to be made in the fintech area is more of the mundane things of money transfer, handling day-to-day affairs like being able to buy and sell electronically, to be able to buy insurance, to be able to do the things that we've always done, except we don't have to visit a brick and mortar place to get it done. We can make a comparison, I think, of what's going to go on in the fintech area to what we've seen in retail. Here in the United States, we've seen big, well-established stores go out of business because they couldn't adapt or wouldn't adapt to the new realities of selling in a digital marketplace. One that I find really amazing was a company called Sears. Sears started out many years ago, started out as a catalog retailer selling to places all across the country. And then they adapted that catalog mindset into a hybrid where they started building then stores into an area. They then built great stores and became cornerstone stores in huge malls here in the United States, but couldn't make the next transition into the digital marketplace. So somebody that in the past had shown great vision in following the trends of the market failed to do so. So I think that is quite a possibility that we're going to see in the financial areas. We've seen uh, banks and so forth uh, go out and spend more money on mobile applications and trying to tie their customers closer. But I do believe that they are really going to have to look at the disruptors that are out there. There are small companies that are doing loans in a way that banks don't do them. We talked about the microloans earlier, and you talked about your experience with that, Sharif. But we're also seeing that in insurance, and we're seeing it in across the board. One of the exciting ones that I think that's coming, I want to talk a little bit about is how fintech will change medical finance, how we go about financing medical procedures, how we go about financing instead of maybe medical insurance. There's some other startups that are starting this way that will be able to completely put the power of how you handle your money for the medical world into the hands of the individual person. So, to the questions, is fintech a great career for people? I honestly think that anywhere in the technology area, as we've talked about before, can be if that is a career that really interests you, and even better career if you can look at it from an innovator or an entrepreneur standpoint. So I would say yes, yes, it clearly is. And it doesn't make any difference what kind of country you're in. There are opportunities in this area because one of the big players, I think, for fintech is going in and serving communities that did not have financial services either readily available to them or not at all. So here in the United States, we're seeing companies that are coming up that are doing banking that own no physical bank branches at all, but handle all the banking activities for people that might be at a higher risk, perhaps defaulting on loans and so forth, and they're going in and they're making available services that would not have been available to them before. As part of this, they're also going through and they're looking at how to assess risk in the financial marketplace. Most of us remember 2008 really well and probably not very fondly for what happened in the mortgage market here in the United States. And a lot of that, you can read a lot about why people think that happened. But I think one common trend that I see and what I read about that is the inability to be able to really evaluate risk appropriately was part of that. So one of the things about the new disruptive fintech companies that are working with underserved markets is they are using new metrics to be able to determine what those risk factors are. And this ties into being able to use computerization in the background, taking data, say, from smartphones, and looking at how people, if they're willing to give them this information to be evaluated for finance, they look more than just at their payment history. They look at how they spend their time, how they spend their money, and there are whole new metrics that are arising out of fintech for being able to evaluate risks. So if you can evaluate the risks better, if you could reduce the costs, and if you can make that available to anybody that has a smartphone, this goes back to this question. Is this a good career? I think so, because it's going to go places that I'm having a hard time imagining right now. And that's usually what technology does. And I think we're going to see that in Malaysia. We're going to see that in Bangladesh, and we're going to see that in my neighborhoods here in Phoenix, Arizona. I think that
Mhm.
it will look different as we go to different places, but it's going to be very widespread. So that's how I
Mhm.
would answer that question.
Thank you, Professor David. Professor Adrian, what your guideline that if the developing nation, even the audience actually ask this question, that they utilizing this kind of fintech, how they can get benefit, like especially this kind of nations through this fintech, like financial technologies and these things.
Well, I think for the individuals, I don't know about, I won't speak about countries or governments because it's a
Mhm.
different topic. But for individuals, you can make a lot of money on the new technology like cryptocurrency. Like I said, I actually believe the value of the cryptocurrency is based on nothing. It's just thin air. But that doesn't mean there's not a lot of people making money out of this. You know, if you look at throughout financial history, a lot of people made a lot of money from things which were not so did not have any inherent value. So you know, no matter what country in the world you're in, if you've got spare time, you can follow closely all the you know, forget Bitcoin and things like that because I think it's too late to get into that. It's already too much. But there's people launching coins that uh, value of 0.00001 cent or something, and maybe most of them will end up basically being zero. But you can also, if you have the time, you can study all of them carefully, and if you get in at the right time, you can be a multimillionaire and make money out of these. And I will repeat, I do not believe there's any inherent value in cryptocurrency, but you know, doesn't mean there's a lot of money to be made there. So and because it's digital, because of the computer, governments can't control it, and so you know a lot of countries like you know, even big countries like India have currency controls. It's difficult for you to move money in and out of India. Um, but if you go into cryptocurrency, you have full control of your money. So be careful because, you know, if you're the last one to shut the door, you end up with nothing. But if you have time, if you follow the forums like on Telegram and other apps, you know, you can make millions of dollars literally, and people have, and people are doing it every day. So I think if people in developing world can make a lot of money by getting into these new areas. But as I said, be very careful because you can also be burned if you do not do it
Mhm.
carefully.
Thank you, Professor Adrian. Actually, that is the point. We are working World Talent Economy Forum. We are developing our academy. We need professor like you, professor like David, professor like donors, those who can actually share the real knowledge about technology, about science, about engineering, and by this way, we want to create the real knowledge. Uh, yes, developing nations and this kind of country, they have many universities and many things, but still, I believe we have opportunities to improve. So, World Talent Economy Forum, as we are trying to developing nations, like we are working with underprivileged people. So, if you have any kind of planning that you want to work with the student, we will collect, we will engage, because we have strong collaborations in Asia Pacific. So, or if you are also from academia, if you have any kind of idea you want to share, it's open request to all of our panelists, that if you have a great idea you want to share, even someone want to contribute, like Mr. Aaron, for developing our marketplace or developing our contents, even Mr. Shovik, if you want to work with us as a technical partners, we are open for collaboration, because this is high time.
Yes, sure.
Even in the COVID-19 situations, we are
Okay.
trying to get into the peoples. Even I'm sure even you are from South Asia, still there are many challenges. We have to work together. We want to work together.
Yes, yes, yes,
So, yes, thank you. Professor
yes, yes.
Donald, so
Okay,
what's
I
your
will
advice?
begin.
Thank you, Mr. Shovik. Anything you can share your idea, we will
Yeah.
implement
Well,
together. Yes.
I want to kind of. Oh wow, this wasn't there. I want to kind of add to what I was saying, which is that if you, I, I want to say first off, I agree with Adrian. I kind of think that cryptocurrencies are a little like the tulip craze or some famous things in the past. We have an American, wouldn't call her an actress, named Kim Kardashian, and she's very beautiful. But as far as I can tell, she's famous only because she's famous. She has no talent uh, that I can discern. So I kind of think that Bitcoin is sort of the Kim Kardashian of financial instruments. And I think that if the United States and other countries start issuing their currency in electronically, so you don't have to carry around the actual currency anymore, think about how that would have to be implemented. If you have $1,000, what does it mean to have $1,000? It means that somewhere in a computer system, the United a piece of the United States government, the Federal Reserve is independent of the government, so the president can't order the Federal Reserve to do this or that or the other thing. They're an independent group, and so what it would mean is that would be an electronic record that is in the bank, in the central bank. So why would you need to put money in a regular bank? I mean, why would you take it out of the where it's safe and then put it somewhere else? Especially right now with interest rates being almost nothing. In fact, some countries have negative interest rates. So that wouldn't be a very good financial model, taking the record of who owns that $1,000 and saying, okay, right now it's going to be the bank. The bank is holding the $1,000 for me. Like, why would I do that? So it's important to understand that whether it's micro loans or any level of loans whatsoever, the way that we get money, we borrow money, is that somebody lends us the money and we pay the people back with interest, so they make money. Now, if there's no point to putting money in banks anymore, then that source of money dries up. And so right now, this is it's starting to happen already. And what it means for us as individuals is that where there's great chaos, there's also opportunity. And so merchants are going to have to figure out how to do things differently. New systems of loaning money have to be developed. There's so incredibly much stuff that's starting to happen because of this. And I want to again point out that if there's US dollars and there's Bitcoin, there's both, why is it that Bitcoin would be superior to a US dollar if they're both electronic? You have them in your wallet, you can trade them, you can do all the things with US dollar that you can do with Bitcoin. But no matter what happens, that dollar will be good. It's not going to crash. It's nothing. It's protected. It has the full faith of the U.S. government behind it. It's totally safe. I can imagine that the speculative bubble in cryptocurrencies would fade or would collapse. But I mean, I'm not going to bet on it. I'm not going to sell Bitcoin short or anything like that. But I think that because it's regulated by the U.S. government. It's part of the U.S. government. There's still going to be a role for money and transactions that take place in a distributed way, so they're harder to trace for drug dealers, terrorists, and anybody else like that who needs to exchange money secretly. There's still going to be mechanisms for them to do that, but I wouldn't recommend getting into that aspect of the business. It could have serious negative repercussions on your life. But again, it's something that no one really knows the answer to. It's something but if you just start paying attention and reading everything that you can about e-dollars and e-yuan, things like that, you're going to start seeing opportunities like haven't been available in a long time. I mean, it's a huge revolution. So that's what I can say.
Thank you, Mr. Aaron. Can you unmute, please?
Yeah, sorry about that. Yes, to touch on another point that was made here, these microtransactions and this micro lending and all that. You have services such as PayPal that have made the booming e-commerce industry a viable option for many people internationally, to where I can conduct business seamlessly with somebody on the other side of the world, pretty much instantaneously at the speed of light. You do see cryptocurrency integration into these things, and I think that's going to be one of the big stabilizing factors in this. Now, that being said, a lot of our stores of value, it was come up with, how do you assign value to something? Currently, a lot of our stores of value are based in human labor. Most of our current ideas of economics, such as capitalism, such as, a lot of the big parts of communism have to deal with the laborer. Well, as you see more of an automation of a lot of the labor-based industries, you have to ask these questions as to how does this reassess wealth to more of a, say, a talent-based sort of an economy or a creativity-based economy? How does one create value in the absence of physical labor? And this is a big question that's being asked here in the United States right now. As automation takes over, as we see all these systems automated, how do you assign value? So to say that something like Bitcoin has no inherent value, again, it was mentioned like Kim Kardashian and stuff like that. There have been many things that have had no inherent value, but as Professor Adrian had said, that doesn't mean that you can't make a good amount of money off of them. That also doesn't imply directly that it's a scam, more so than it is that value is starting to be based more upon, like in the tulip craze, beauty. Or in the case of cryptocurrency, the explosive potential for growth. So I am very interested in hearing some more opinions on a store of value or how we are going to move forward in an economy when all of our economic values of the past are essentially based in labor, and now labor is very quickly being phased out in the physical sense, in the manual labor sense. And that's kind of one of those things I would like to see discussed a lot more, is how do we move forward in basing value when there's no labor to really base it off of, when production's automated and recycling is factored into it with 3D printing, to where pretty much everything from the building of the machines to the diagnostic of the machine, from the sowing of the seed to the stocking of the shelf, is automated. Are we going to eventually end up where currency itself is no longer viable? And those are just some questions that I would like to see discussed. Those are more of a question than an addition, if anything. Thank you.
Thank you. Mr. Shovik. Mr. Shovik, can you hear me? Mr. Shovik, can you unmute yourself? Okay. Okay. Thank you. There is a question from audience. Anika, what are the thoughts on fintech and bank collaboration? So, Professor David.
Yes. So obviously, fintech and the banks are all tied together. One of the biggest things that comes to me when I see bank cooperation about that has been third party companies that have marketed to banks to help them compete in this newer fintech marketplace. So, an example that I see here in my area a lot is something called Zelle, Zelle. Zellpay.com, I believe, is their website. And what that does is it allows personal transfers, similar to like maybe PayPal, which was talked about earlier. PayPal was early to the party, a big part of eBay, and you were able to register with an email address, and you could send and receive money with anybody else with an email address. And PayPal is still used quite a lot that way. But getting back to bank cooperation, the use of Zelle is something that I see that banks have been picking up. So friends of mine that bank with different banks, I can go into my phone app, because once again, right now, I think the epicenter of fintech is the smartphone. I can go into my smartphone and I can say, pay $50 to Susan because we went out and we bought something together and my half of it's $50. And it goes straight out of my account, straight into her account. What do we have in common is this ZellPay app that's been integrated into my bank's smartphone app and her bank's smartphone app. So that cooperation between the banks is allowing for that transfer. And I think banks are doing that as a hedge against third party companies that stand up that would take the bank out of the picture for that transfer. I think we're going to see third party apps like that for insurance. I think we're going to see third party apps like that for investing. And I think we'll see them marketed between banks as well. Banks have seen what's happened to previous generations of brick and mortar businesses. And I do see them that even though banks have this reputation for being very conservative and very slow to change, they have seen what's happened in other marketplaces, and they're willing to add to their portfolio to maintain the current customers that they have, but looking at attracting the 20 somethings and the 30 somethings, which have a whole different approach on how they spend money, how they save money, and what kind of services they want. And maybe even more importantly to the big businesses, what kind of loyalty do they have to that? I've been with my bank for 20 years, and they've done very well by me. And they have been a very progressive bank, adopting many of these features earlier. But my daughter doesn't use a bank at all. She uses, well, not in the traditional sense anyway. She opted very early on into fintech and runs her whole life off of her smartphone. And this is where the future is at. So the banks are going to have to cooperate to be able to stay relevant, and they're going to have to be able to adapt to stay relevant.
Thank you, Professor David. There are more questions from audience, but I have to go for the concluding remarks for today. Tomorrow, actually, Eid for Muslim communities. So, Eid Mubarak to all of you. And beside that, actually, one of the things what's going on inside Israel with Philistine and Israel, we do not like this kind of things. Even in the Ramadan period, every life is important. It's in Israeli life, it's a Philistine life. Even in the COVID situation, I think the world is not ready for this kind of lose. So I don't know, definitely all of you have your own opinion. We have full respect all of your opinion. But we believe that we have to protect all of the human lives, because the world move with the critical times, with the COVID challenge and many more things. So definitely we have to save more lives. So we do not want more political turmoils and more problem like this. So hopefully in global community we will work together, then we can save more human lives. So I want to start from the Professor Adrian, that what is your concluding remarks for today, then Mr. Shovik, then Mr. Aaron, then Professor Donald, and finally Professor David.
Well,
Yeah, I would like to say that fintech is definitely
So, sorry,
Yeah, please.
Mr. Shovik, I'm coming to you. Just give chance to
No
Professor
problem.
Adrian. Yes, Professor Adrian.
Okay, thank you. That was a very good night. I'd like to reiterate what Donald said, which is I also agree for the foreseeable future, the US dollar will be the value, the ultimate value, holding of value. It's every other asset is basically valued against US dollar, and I think that will be for the foreseeable future because US is still the #1 economy in the world. US dollars backed by all of the assets of United States of America, which is massive. Um, and, well, and this is why I think when you get into fintech, you have to think what is the ultimate value of the technology items which are being used as financial assets. I would also add I believe there's a lot of young people in the South Asia which listen to this forum. So if you're smart enough, you can launch your own new token and or coin, and a lot of people are doing that. And this is another possibility. All you need is a computer and to be smart enough to launch a new token. It's getting more and more easy. 99% of them probably will fall to value of zero eventually, but you might generate a lot of money. So take advantage of the opportunity that these new technologies like tokens, which are being launched now, and you can create your own cryptocurrency token. I believe it's relatively easily, as long as you have some computer knowledge, you can do that, and it's something to get into because technology is moving very fast. So it's normally the people who get in first that can make something from that. But I also agree with Professor Hagen, who said about the tulip, about the the tulips, I think. And so ultimately, these things may not have long-term value, but it doesn't mean you can't make short-term financial profit from these latest technologies. But you just have to make sure to get up, leave the party before the party's over, so to speak. So I'd like to say goodnight based on that. Thank you.
Thank you, Professor Adrian. Thank you for your contribution for World Talent Economy Forum. Mr. Shovik.
Yeah, I was saying that fintech is definitely asset. And in the upcoming day, it will remain to be so. And it's going to be implemented much more in the upcoming days. That's the point. So,
Thank you. Thank you for joining today's sessions.
yeah.
Mr. Aaron.
Thank you.
Can you unmute? Mr. Aaron.
Yes, at the verge of sounding a little bit perhaps fringe here, I see something much bigger here. I see a sort of a push towards a decentralization, wherein, okay, to put simply, this is a shift in power. You are having people starting to realize the effects of crowd investing and of things of that sort. And this is causing economic booms in some places because, like one Bitcoin is worth 55, last I remember looking into it was in the 50s of thousands of dollars. So then you take this and you go somewhere to a country where their currency is worth a fraction of the US dollar. And you now have the ability to live there for years, and instead of focusing on the labor of things, you're able to focus on creative efforts. You're able to see, to put simply, so far we have adapted to a survival-based mindset of the world. And technologies like this, such as automation, such as AI, such as these financial technologies that are developing, really give us the ability to kind of slip the surly bonds of the survivalist mentality and of the hard labor mentality, and sort of let us kind of transcend that and kind of go, above and beyond to these creative based stores of wealth. I think that's how we're going to see these transitions occurring. Also for funding projects and things like that. A lot of these coins are actually launched as funding for a project. Not much differently than a stock would be, or any kind of, an early access token or anything. It's essentially what it is. So, you're going to see people using this to fund big tech startups. You're going to see a lot of co-collaboration, co-adaptation, and co-adoption with global governments and things of the sort, to where, one day I almost would like to see more of a decentralized as opposed to the centralized. Like right now, everybody uses the US dollar. That's very centralized. And, it was said, oh, well, the US dollar, there are certain things it can't do. It can't just drop like Bitcoin. I think the Weimar Republic and the things that occurred in the Weimar Republic do caution us towards hyperinflation. I would also like to say that from my understanding, for every dollar that the U.S. Reserve doles out, we owe $9 on it. Now, I'm not an economist, but to me, that almost doesn't seem sustainable. I'm not going to say I have all the answers here, but just some interesting points of consideration to move forward with.
Mm-hmm. Thank you, Professor Donald. Thank you, Professor Donald. Yes. Please unmute.
Everybody's been bringing up fascinating points. I want to suggest to people that are interested in it, that can take the time to do research on their own, to look up the labor theory of value. It's a theory of value that not all economists hold. For instance, the economist John Kenneth Galbraith believed that the value in money was that money was actually debt. That when it represented debt, like it was like you're borrowing. It's a representation of how much you can basically pay back. And so then what happens then is that if that's true, then where does money come from? And as I said in this Economist article, is that basically it's created by banks, and it's created by bank interest. And so, that's a lot of economists believe that, and they think that Marx's labor theory of value is kind of outdated. So I'm not going to weigh in on that because that's incredibly complicated. But if you just go, there's good, long, detailed articles in Wikipedia and Stanford Encyclopedia of Philosophy. Galbraith's book, Money, is worth reading. And again, people don't agree necessarily. So that's something, an academic thing that I think if you start to understand that better, it'll make it easier for you to identify the areas where the most disruption is going to take place. The issue with the decentralized thing is it's really great when it's going up, but you're kind of toast if it starts going down. And what Federal Reserves do is they manage the amount of money that's in circulation so that the price of the money is stable. And I don't know if Second Life exists anymore, but it was a wonderful world that you could go in, a virtual world. And they had an economist that kept track of their money supply, and they would issue more money or then take money out of circulation so that the relationship between the currency inside of Second Life was stable relative to the dollar. And that's a problem, a benefit and a problem with with decentralized currencies. If no one is managing how much of it is in circulation, it'll have a tendency to go up and down based on various external factors. If the dollar starts becoming a widely used cryptocurrency, or which is basically what the e-dollars would be, in my view, I can see that there would be a lot of value in keeping your money in something that you know is going to be stable. It isn't going to crash, and so because of that, that gives the dollar a large, a competitive advantage in that area. And I agree with what everyone else has been saying, that there is, it's hard to put your finger on what the value of something like Bitcoin actually is. And there may be in the long term some reason that we continue to consider it valuable. However, it's never competed with real stable government-backed e-currencies. So I think I wouldn't myself. You're gambling if you do Bitcoin. You can make money. You can make money going to Las Vegas, and if you're lucky, you can make money. But the way that the odds are set up for you in Las Vegas, over the long term, you will always lose money. It's like that's what's going to happen. So I don't personally like gambling as a way of making money. I mean, I'll gamble like working for companies that are new startups and things like that may or may not succeed. But I feel that in those cases, my actual effort is going to make a difference in the probability that I'm going to be able to succeed. I have some sort of control over it. So as others have pointed out, the whole thing of the physical thing of how these transactions are going to take place, especially if they become super widely used, like the US government gets into it, is a whole new area of technology the current fintech is just beginning to touch. And then the whole thing of how we're going to create value from loaning money and other kinds of ways that we create value, we're traditionally been creating value. How are we going to do that? It's not clear at all how that's going to be, but I'm sure it's going to happen. It's just, in this case, I wish I could be more prescient and tell you exactly which things are going to be. But I do know if you just keep your eyes open, it's everywhere around you. I mean, this is a huge change. It's going to change the entire world in ways we can't even imagine right now.
Mm-hmm. Thank you. Professor David, what's your concluding remarks for today?
Well, I want to start by my concluding remarks by talking about what I think everyone has touched on, and that is trust. We talked about banks being the first place to put money. We talked about being able to loan and pay back. All this has to do with trust. Everything in the financial sector, matter of fact, perhaps maybe everything that's human-based, is a trust-based relationship. So those startups that can develop trust, can develop their following, those are the ones that are going to be reshaping financial technology as we move into the future. Now, we've talked a lot about Bitcoin, but actually I think the fundamental aspect of the distributed ledger, which is behind Bitcoin, may be even more powerful than Bitcoin itself, because distributed ledger, I think, is what can produce this 21st century trust that we're talking about. The other thing that can provide trust is proper regulation at various levels of government. That can provide trust too. Generally, regulations come in because of some breach of trust that they then want to rectify. But trust is the underlying value itself. And I think distributed ledger will go a long way towards that. I think the fact that distributed ledgers are open and transparent by nature, that's how they work, because a single transaction is recorded multiple places across the planet at the same time. It makes it very hard to be able to counterfeit or to go back and doctor records. I think this will help in determining what kind of regulation we need as we go forward with the new forms of fintech. But I also want to say that I do believe, as I've heard others say, that we don't know exactly how this is going to play out. My crystal ball is very foggy as being able to predict the specifics of the future. But what I can say is there is a bright future ahead for fintech. So stay close, watch it, go where you can trust, and I think it's going to be exciting to see how this all unfolds. Thanks for a great topic today, Sharif.
Thank you. Thank you, Professor David and everyone. We have some special announcement because 29th and 30th May, we have our summit. So I request everyone to join in our summit. Second things, we have to go for our fundraising options. So if you want to support our initiative through PayPal account, our PayPal address presidentwtforum@gmail.com, or with through Patreon. You can support our initiative. You can donate us because we are expanding our activities. Even we need more talented people like Mr. Aaron, Shovik, those who can help us to grow our summit, our research work, our consulting works, and we are very happy that we are developing our teams, and especially the intellectual community like Professor David, Professor Donalds, Professor Adrians. We need more of your support. Any of your good idea that we can work with in between our community, we are ready for that. So we are open for your guideline, your advice, how we can contribute. Any of your concept paper you directly can share with us and we will implement it. So thank you everyone. Share our content as much as possible. Subscribe our YouTube channels, and definitely your positive attitudes and positive support for World Talent Economy Forums actually give us the energy. Last 1 year, I think 365 days, every day we are working with our team, and especially thanks to our speaker, those who continuously support World Talent Economy Forum. So hope your support can help us to grow a proper sustainable ecosystem which will be helpful for our economy. Thank you everyone for joining today's session. Bye and take care. And Eid Mubarak to everyone.